What's going on, my loonies? Welcome to a Patreon promotional. Per request from Bash, I'm gonna hit up a video on MPX. Those of y'all on YouTube that are gonna see this later, consider subscribing to my Patreon. Link comment below. In video description. $5 a month, you be with like-minded investors, get access to exclusive content such as the hidden gem collection, different analysis videos, more direct access with me, and be and way more along in the future, a lot more opportunities that I'm not at liberty to put out just right now. All right, but it's going to be an exciting time for years to come. Okay, so now that we got that out of the way, let's talk about MPX. All right, so they reported earnings just on the 25th of July. So that was like a couple weeks ago, Thursday ish. Okay, 25th of July. So I've listened to the conference call, I reviewed the presentation. Let's get into it. All right. So let's talk about the conference call. Pretty short one, actually. But what I gather from the conference call is there's still a lot of uncertainty. The boating industry has been one of the industries or sub industry categories that's been hit really hard due to high interest rates. Employment turbulence, high interest rates, cost of capital is expensive, inflation, all the prices are going up. What does that all translate to? Well, that translates to a weaker consumer that's more conscious in the way of they don't want to buy big purchases. They don't want to buy cars, boats, solar panels. They don't want to buy that stuff right now. They're just looking more towards more so survival, buying food, paying the bills, and so forth. Okay, so seeing contraction. All right, in the earnings call, I mean, they said the gross profit has declined like 54%. All right, these are some dramatic, steep declines, but I think the measure of character in different angles needs to be assessed. And what I mean by that is, what is management doing about all this? All right. Well, I got to say that I've been very impressed with management. We've pretty much found out about this company through another video review of MBU Malibu, but in the competitors of Malibu, this is one that came up, and this is a shareholder-centric company. Let's go to the actual presentation. Um, they're paying dividends. This is a dividend company. Let's look at valuation. They have a little over 55 million in cash, no debt. Market cap is trading at 346 million. So from an enterprise value perspective, they're trading at a little over 291 million. Looking at their revenues on their earnings, they did 383 million last year, and trailing 12 months they've done 287 so thus far. So in the trailing 12 months. So trading quite below potential revenues from an annualized basis, which puts the organic price to sales at about 1 and below on a trailing and a forward metric. All right. Earnings, though, let's go to earnings estimate. Consensus estimates got them seeing contraction of EPS by 50%. And then next year, EPS growth of 25%, or reacceleration. Analyst consensus estimates for revenue got them losing 28%, so revenue decline going to 274 million when it's all said and done by the end of the year. I can kind of see that in the colder months. I think maybe Q3 we might see some better, maybe they see a little bit of more sales. But according to the conference call, the actual the management is not optimistic about that. All right, they're saying that with the interest rate cuts, even though the first cut will come in, that's not going to have too much of a big impact. It's just going to be barely the premature starting phase of the recovery in this industry. All right. Um, I've been impressed with the management, and this is why. Let's go to dividends. All right. Let's go to dividend history. Right now, this company is yielding 5.61% on a forward yield. All right. EPS is 60 cents on a forward basis, and the yield projection is 56 cents. But we'll go to the dividend history. Okay. Look at this special dividend they just issued out in May for 70 cents. And that's on top of another 14% or 14-cent dividend. So let's pull up the calculator. All right. So if they issued out a 70-cent dividend, and it's one of the rare cases I'm doing dividend analysis on my channel. Okay, so if they did a special dividend of 70 cents and they issued out another dividend of 14 cents, okay, that is an 84-cent realization on your stock to price. Okay, so that's 1/4 divided by, let's do the stock price of today, minus 1. So they are yielding that just on that one basis of 1/4. The equity has yielded 9%, 9.1% of the actual position itself in 1/4 realized. If you've been following along on how I see the actual value and the residual claims on corporate profits, okay, this is the exception. If you have a yield function via a dividend, okay, that is not a residual claim on the profits. That is an actual realized capital appreciation event on profits. And what I mean by that is a lot of investors that if I wanted to participate in the corporate profits for realizing them, I'd look to dividends. I'm not there quite yet because I'm not much of a. I mean, there's different strategies, but I'm more of a growth-oriented investor. And later on, when I have growth of capital and I want to realize in corporate profits, dividends are going to be the way. But let me tell you, in the times of turbulence, when the going gets tough, you get to see the character of these companies and if they're shareholder oriented or not. They returned capital in the toughest of times, and they've done it via realized dividends right then and there. Okay, and I think there's couple reasons for it. They're not guiding. They're not guiding forward. I've not seen any looking at their actual presentation on their quarterly review. They're not giving any guidance forward, so they're probably not even sure. If you've been following along with this company, I've been saying that it's going to be paying dividends up to the point of a merger and acquisition event. All right. In the conference call, they have stated that they are interested in doing a merger and acquisition, but none of the good companies that they're interested are willing to sell right now due to the lower valuations. Okay. So a lot of these other good companies are just hunkering down and saying, we're not going to sell. All right. And then there's a little disclosure here that Mike Smith, which is part of the management, pretty much stated, you know what, if we're not going to just make an acquisition to do one, we're going to make sure we're doing it right. And that respect, okay, a lot of companies, they'll just do one to do one, and this one is more strategic about it to have more of a warm and fuzzy about it as well, as far as getting a return on ROIC. All right, return on invested capital. Okay, so um, that's something to consider. Um, this company is undervalued because I think their management team is really good, and they're realizing returns for their shareholders, and they're more shareholder centric. um, the aura of the merger and acquisition, if there's one that's to happen, I don't think there's going to be one. So I think they're going to continue to pay out dividends and special dividends. All right. And they're actually maintaining, on top of that special dividend, they're maintaining their quarterly dividend, so of 14 cents. All right. So, and I like the balance sheet, makes me feel real good. So they can issue out special dividends. Maybe if they want to do the acquisition, they will. They are. I don't believe that this company is going to cut the dividend unless they do the merger and acquisition. If they do one, okay. But I don't think that the dividend is at risk to be cut. All right. Let's look at their management. All right. This is the management team. The chairman of the board. You don't hear much from the chairman of the board. But when it comes down to it, at the end of the day, behind closed doors, this is the big dog. This is the big dog. He's the CEO is pretty much the executor and talking to the chairman, and the chairman of the board said, "Well, if you're not going to give guidance," and I'm speculating here, but behind closed doors, it could have been, "Hey, if you're not going to give forward guidance, we're in big turbulence in the market. Maybe issue out a special dividend and be a yield function to realize to our shareholders. We need to take care of our shareholders." And then the chief executive officer is like, "You know what? You're right, because you're the chairman of the board. We'll issue out a special dividend." So with the actual dividends, and that was just one quarter. So with the 4 quarters combined, I will add it up. Let's go back here. They did 84 cents, right, in that quarter. Let's add, let's add 14 cents for Q1. And then let's add another 14 cents Q2. And then we'll add another 14 cents for the fourth quarter. Realization on a yield basis, they're returning $1.26 per share in dividends a year, and that's yielding well over 10%, and it's beating the market, all right, on an average annualized basis. Okay, so something to consider. All right, so I like the management. They're dividend oriented, and typically with dividend oriented management teams, a lot of them are going to be older. They're going to want to realize profits as averse to dramatic, crazy growth in revenue realization, if that makes sense. Okay, because if I get older, I want to start realizing the profits. Because if I don't realize the profits, then I'm just about to die, or I don't know if that makes sense. All right, but that's one of the common reasons for a lot of the dividend stocks, because the management teams want to realize profits if they don't have too much growth oriented opportunities for that company, right? And that's not to say that this stock can't triple. Okay, let's look at the boating industry sector. Has been in gradual decline ever since the financial crisis of '07. There's most of your boating is going to come from Florida, the highest boating consumer there. I guess the market size for global boating industry is 35 billion, but keep in mind, that's a big TAM, but that's the world, okay? And it's a highly regulated space, all right? Moving on to actual market sentiment, mixed bag. Different analyst consensus raising, down upgrades, downgrades. A mixed bag. Analysts I think are lost on the macro. So, you know, I mean, something to consider. You're going to have to make your own judgment on recessionary environments and so forth. looking at the options chain opportunity. Okay, so there is an options chain on MPX, and looking at the options chain, the yields on the leaps are crazy. So I mean, your February of 2025, they got $2 calls on $10 strikes, plus you're realizing the dividends. So I mean, you can yield if you want realized yield in a great company with a great management team and an undervalued stock. MPX may be the answer. Not telling anybody what to do, not financial advice, but this is what I see. I think that well, and they also management team has also guided a lot of contraction in the margins. So huge opportunity if you think that this is the bottom for that sector industry and you want a high yield to go along with your investment to actually maybe a possible double or a 3x in 5 to 10 years with high dividends in a safe company with great management. This might be the company. All right. But with that being said, I'm going to close it down. That's my analysis. I'll put out another. I'm sure we'll be following up. I'll be following up with this company for several years to come. But with that being said, if you enjoyed this video, like and subscribe, comment down below. Consider subscribing to my Patreon. You get to a lot of like-minded investors are actually identifying these different little smaller companies with high growth potentials to where you might find the hidden gem there. All right. So with that being said, thank y'all. I love y'all, and enjoy the rest of your week and the rest of your day.